Hello everyone, we are Team 7. I'm Arundhati and my team members are Dhruv, Neeti, Pinyi, and Ziji. And today we will be discussing the recent financial performance of our company, Visa Incorporated, and our initial projections for its future performance. We will be briefly introducing our company and its products and discuss its customer value, target customer demographic, organizational and management structure, mission statement, and the effect of its business structure on its financial health. We will also analyze its recent financial performance through the cash flow statement and income statement from the 2019 annual report and then provide our initial projection. Our company, Visa Incorporated, is a global payments technology company that enables consumers, businesses, banks, and governments to use digital currency. It was founded in 1958 as Bank AmeriCard under Bank of America, who then gave up control over it in June of 1970, and it was then rebranded as Visa in 1976. Visa is headquartered in Foster City, California, United States, and has over 19,500 employees across the globe. We will now provide an overview of the company organization. The primary products of Visa are credit cards, debit cards, gift cards, and prepaid cards. They utilize VisaNet, which is the proprietary transaction processing network of Visa to facilitate electronic fund transfers. Visa offers a variety of cards under each category depending on the card user's needs, which is often based on the card user's age, earnings, and country. Visa generates customer value by ensuring that their payment technology is fast, secure, scalable, reliable, and flexible. Transactions are processed in less than a second, and there are multiple advanced defense layers in the network to process around 80 billion transactions annually, and almost 100% network availability has been achieved over the past 15 years. They also offer domestic processing in over 100 countries. As shown in this pie chart, about 64% of the card holders globally are between the ages of 25 to 55 years, which corresponds to the age group that is actively employed in the workforce. Therefore, globally, the target customers are those between the ages of 25 and 55 years. I will now hand over to Ziji to talk more about the company organization.
Now I'm going to briefly talk about the management structure. In the graph of the most popular credit card in 2017, Visa is the clear winner in 123 countries, while MasterCard and American Express are the most popular in 22 and 23 countries. That was benefit from the fact that in 2007, Visa was able to merge 3 independent operating regions into one company called Visa Inc. and successfully took the company public. According to the Chief Operating Officer John M. Patrick, since the IPO, the company global sales, client service, marketing, product development, and innovation functions would be consolidated effectively. In 2016, Visa Inc. acquired Visa Europe, which further increased its payment volume around the globe. We will elaborate on this acquisition later. The core missions of Visa Inc. are growing access and acceptance, expanding partnerships, and opening new payment flows. The way to approach these goals are to provide technology-driven service like the Easy Tap to Pay and enhance security and privacy in e-commerce. Visa promotes and advertises these amazing features through different headquarters to tailor the products and services to make life easier for region members. The management is organized by geographic regions. The Visa Inc. oversees the company's global interests and setting strategy directions and management of different regions. The business structure enables Visa to respond to the needs of its members effectively and alter the Visa international rules and products to suit the requirements of region members. This business management model provides a strong economic tenacity toward the global market. For the analysis of organization's financial health, let's look at the cash flow statements for the past 3 years. The team pointed out some rapidly changing attributes. As we can see, the net income from Visa products and services increased to $12,000 million. The settlement receivable outflow and payable outflow both increased dramatically. The client incentives as a reduction to operating revenues reflected the long-term contracts with financial institution clients for various programs to build payment volume, increase Visa-branded card acceptance, and win merchant routing transactions. Visa company was doing a magnificent job in client incentives. Cash flow from investment activities are relatively lower in 2019, with $591 million outflow. Cash flow from financing activities shows that the majority portions of money went to repurchase of Class A common stock with $8,607 million outflow, $2,269 million outflow to pay dividends, and $1,236 million outflow to payment of Europe acquisitions. From the graph, it's obvious that the net income from operation flows to the repurchase of stock, paying dividends, and costs related to Euro acquisitions. Now I'm going to have Niti talk about the income statement. Thank you.
Thank you, ZJ. Now coming to analysis of income statements. For that, I have considered statement of operation and statement of comprehensive income. For all the calculation done in the further slides, I have considered all the text that is highlighted in blue in both the statements. Now considering changes in net revenue, clearly there is an increase in revenue by 11.49% from that in 2018. One of the major reasons for this increase is the increase in revenue by services, data processing, and international transactions. Another reason is Visa finally adopted the new revenue standards set by FASB under the accounting principles. On considering changes in operating income, which is our earnings before interest and taxes, there is clearly an increase of 15% from that in 2018. Now, considering changes in taxes, we can see a huge variation from that in 2017 to 2019. This is majorly because the deferred taxes due to Visa Europe acquisition increased in 2017. Also, the effective tax rate was 43% as compared to 20 to 25% in 2016, 18, and 19. Visa made a huge profit of $10,000 million in 2019. Some of the major reasons for such huge profits were Visa completed some major mergers and acquisitions in 2019, about which we have talked in detail in further slides. There was a huge increase in revenue, and at the same time, there was decrease in taxes as compared to the other years. Now, another way of analyzing the overall financial performance of Visa is by looking at the earnings per share. Higher the earnings per share, higher is the company's profitability. It's clearly visible from the graph that the earnings per share increased over the 4 quarters in 2019. A sudden decrease in estimated earnings per share for quarter 2 of 2020 is discussed in further slides. On considering only financial year 19, it can be said that there was a growth of 15% in the stock prices or our earnings per share, which implies that Visa is financially healthy and is making huge profits. Some of the major events or business decisions taken by Visa in financial year 19 till present are listed below in chronological order from latest to oldest. On considering only financial year 19, Visa acquired Earthport, Payworks, Verify. It also renewed its sponsorship for various events like New York Fashion Week, NFL, FIFA, Olympics, and Paralympics. It also paid a 1.1 billion euros to fulfill the terms of Visa Europe acquisition. I'll hand over to Pinyin to talk about the initial projections.
Now, I'm going to talk about initial projection part for the company. At quarter 1 in 2020, Visa's revenue increased 10% year-over-year basis because of increasing in cross-border payment volume and transactions. At quarter 2, the revenue may be impacted by coronavirus. It will let company decrease the revenue at about 3 to 5%. At quarter 3, it is possible to recover in financial performance, so the company can expect increase in transaction volumes and payment about 1 to 2%. At quarter 4, the company is expected a boost in revenue because people prefer digital payments rather than cash transactions directly. I'm going to talk more detail in supporting statements. Before the coronavirus outbreak, the industry had solid growth because of higher consumer spending led by a strong labor market, an increase in online and e-commerce sales. A few top players in the industry such as Visa, MasterCard, PayPal are bearing the coronavirus-induced business loss. First, the coronavirus fear has hit the consumer spending hard because travel frequency becomes much lower, as people are less inclined to travel as the virus spreads worldwide. International transaction revenues account for nearly 34% of Visa's net revenues, so it has serious effect on Visa company. Second, Visa said cross-border growth rates were getting worse. Moreover, it may not have hit bottom yet in terms of company earnings. Third, people don't want to buy non-essential products as before during this period. As countries have imposed social distancing orders, domestic spending has sharply declined week on week, and that it would probably influence the growth in revenue in the second quarter this year. On the other hand, although the stock market is falling at a persistent rate, it should be noted that the drag is temporary. Also, in order to decrease the risk of infection from handling cash, digital payments are likely to see a boost as consumers shift to contactless channels. So, demands are not eliminated, they are just being pushed back. In fact, the price plunge is a great investment opportunity for investors. Therefore, this may have some positive effect to the company in the near future. Now, two of are going to introduce the calculation part for forecast.
Continuing with the initial projection, we can see that Visa's revenue increases almost every quarter. Assuming a decrease in revenue by 4%, quarter 2 revenue is likely to hit by the current pandemic situation and it will go down to $5.75 billion. This is the projected quarterly revenue. The revenue will decrease by low single digit percentage for quarter 2 and quarter 3. But after the situation wears down and expected demand for digital payments and return to normal business operations and increase in transaction volume, like the quarter 4 revenue is likely to go up by around 4 to 5 percentage to a value of $6 billion. The total net revenue will be around $23.5 billion with an annual growth rate of 1 to 2 percentage. This is the current Visa stock trend. At the beginning of the fiscal year, it was $179.2, and before the COVID-19 news hit, it was $213.31, which is a growth rate of 16% in just a matter of 5 months. And we can safely conclude from that that Visa was doing financially very great for this fiscal year, and it did great in the previous year as well. With a number of acquisitions like Plaid, Rambus, Earthport, Visa can expect a growth in cross-border transactions and improve in user experience and ease of access to financial accounts. With new partnerships following this year with Infosys, Accor, and payment services in Argentina, Visa is improving its global reach worldwide and will boost its revenue from client incentives and increase global corporate payments. After the current pandemic situation, the e-commerce and travel sales are likely to go up worldwide, and Visa can expect a strong financial performance for quarter 4 and for the fiscal year 2020. To summarize, these are the 6 pillars of Visa. It ensures secure, reliable, and convenient transactions for all its users. It offers a wide range of products like credit, debit, prepaid, and many more to a wide range of customers based on their income levels and age group. Its partnership approach improves its global reach worldwide, and that's why it is expanding continuously in many countries. Offering different digital payments like business to consumer, consumer to consumer, people to people, and business to business transactions. It also offers value added services like fraud management and security, merchant solution, and tokenization. Effective branding, like sponsoring events of National Football League, FIFA, and involvement with international Olympic committees, an excellent way to brand itself. Although the current market situation